Welcome back to my YouTube channel. It's Saucy here. Yeah, today we're gonna be doing a breakdown of a trade I took. Okay, so I'm gonna be breaking down this trade step by step, my thought process, based on the directional bias, my area of liquidity, and the model I use, and how I entered, manage, and yeah, just simply everything. So I'm gonna advise you get a pen and a notepad and jot down because you're gonna take some nuggets. You're gonna get some knowledge from this. Okay, so first of all, I'm going to be explaining with the schematic, right? I'm going to be explaining with the schematic so you guys can understand my thought process before we head on to the chart. Now let's see. Okay, so this is schematic, right? Okay, good. So this is schematic. As you can see, first of all, you have to identify what's your directional bias for the day. So as a day trader, for me, I'm more of a day and intraday trader, meaning my trades go longer for a day or sometimes even 2 days, right? Depending on the volatility and how the market is moving at a particular time. In fact, I've been in a trade whereby I've held a trade for 3 days, even a week. It's possible, it depends on the volatility. Most times, my best trades are actually mostly playing out in the session, meaning, I might wake up in the morning, place a trade by London session, and before the end of London session, the trade at ATP or as it's SL, depends on, the probability of the trade. So, as a day trader, you come to the chart in the morning, your goal is to first of all understand what your bias, where is price coming from and where is price going to. So, one of the most important um, tools to understand your directional bias is market structure. Now, market structure is very, very powerful, right? Now, I promise you guys, I'm going to make a video on market structure, a detailed video on market structure for you guys, so you guys should relax, okay? I'm going to make a video on that. But for now, let's just, focus on this. So, market structure, right? So, what's market structure? Market structure, we have two types of market structure. We have a bullish market structure and we have a bearish market structure, and we also have swing structures and internal structures. So now, how do I frame my bias in the morning? So clearly, as you can see, this is the chart. So first of all, I look for the recent break of structure, right? So this is so this is the low. We have a swing low. The market put in a swing high, right? After a swing high, what do you expect? We expect what? A swing low. We expect a swing low. So we break structure to the downside, right? This is a break of structure, and now we are bearish to the downside. Now understand that this is just an internal structure, right? This is just an internal structure. So for me, waking up in the morning and seeing that we are bearish, and I know this eye is protected, it means that I just want to be looking for sales, right? Because we are more of following the trend. We are following the trend. The trend is your friend, just like it says. So we want to make sure we are following the trend, and in that way we are going to be able to capitalize on huge moves, because once you are with the trend, you're going to capitalize on what huge moves, not trying to scalp and play the internal structure. No, the main purpose is for you to understand your bias and flow with the trend, right? So after you identify your bias, the next thing is to understand what's your area of liquidity. Now this is a subjective thing because a lot of people have what they call the area of liquidity. But for me, what's the area of liquidity that that's very, very important for me is number one, we have what old highs and old lows. Now those old highs and old lows can be what, e.g., we have swing structural high and low. Also, we have the internal structural low. So this is the internal structure, right? This is the swing structural low. We have the swing low, we have the swing high, and we have the swing low. Now this is an internal structure playing out. So this is the internal low, internal high, right? This is in a swing low. Then this is internal structure. So for me, I see internal structures internal structures as what area of liquidity, right? I see them as what area of liquidity. We have equal highs and equal lows, and the most important area of liquidity for me is what the session highs and low, right? So we are talking about the London session, the New York session, and mostly important for me is the Asian session. So I make use of the Asian session because most of the time the Asian session is always ranging, and the highs and lows are points and areas of liquidity, right? So my model for me, what I trade personally, in fact, in all my trade is what I want to make sure that the Asian session is ranging, and I want to see a read above the Asian high, meaning that in this scenario, right, this is the Asian session, right? Let's say the market's open around here, this is when the market's open. I want to see what the Asian session range. Now, understand that not all the time, the Asian session is not going to range all the time, but most times, the Asian session ranges. So my area of liquidity in this scenario is what one is the old high, and also we have what the Asian high and the Asian lows are my what area of liquidity. So how do I implement all this together? Right. First of all, understand my bias. We know we are clearly bearish. Right. Now, secondly, look for my area of liquidity. So the area of liquidity such as the equal highs, right, old highs, and also what sessions high. Right. So we have this old high as an area of liquidity. We have the Asian high as an area of liquidity also. So now that I've gotten the bias and I've understand the area of liquidity, and I know that based on my bias, I'm interested in selling. So what did I wait for? I need to what see a raid of what the Asian high, look for a displacement and follow through. Now understand that this is a bearish market structure, so we should be selling. Now there are gonna be some scenarios whereby you are buying, but no. For now, understand, just follow the trend, right? Follow the trend, and the trend is your friend. So this is the Asian session. We have the accumulation. This is the accumulation of the Asian session. You can see price range. Then we have the manipulation to the upside. Now the manipulation mostly happens during London session, or sometimes New York session. So we have the manipulation to the upside, and what we are interested in was catching a distribution, right? For price to create another lower low. So it's very, very simple as that. Okay. So we have the accumulation, the manipulation, sweeping of the Asian high, and what the distribution to the downside. The bias is we are bearish. You could see clearly that we are bearish, and between, you see this high, right, is an area of liquidity. And when price rate it during Asian session, London complete the manipulation and you distribute to the downside. That's very, very simple. It's a very, very simple thing. So let's go to the charts, and let me show you guys. So this on the charts, clearly you will see. So this is the trade. This is the particular trade. This clean shot. I mean, this shot was clean. Okay. So first of all, let's start with our market structure. I want to understand where are we coming from and where are we going to. So as you can see, we have our recent break of market structure right here. So we have a break of structure. Right. This is a break of structure to the downside, meaning that what we are bearish to the downside. Now, after a break of structure, we expect a pullback. Now, this is the pullback happening. So, how do you frame our trade? So, first of all, you want to make sure you have the Asian session, right? Asian session. So, this is the Asian session range. As you can see, I have an indicator, right, that I used to get my Asian session. So, the indicator name, I think, is an FSN session. There are a lot of indicators that you can use, but that's the particular one I use, FSN market session. So this is the Asian session. So we have the Asian session ranging, right? After the range of Asian session, as you can see, we was manipulated to the upside. So we have the accumulation, price manipulated to the upside, right? After the manipulation, we are interested in what's catching this move to the downside. Now, after the manipulation, how do you understand that okay, price is ready to what continue to the downside, and how do you know this manipulation is what is correct? So you want to what wait for a displacement, right? So this is a displacement of the last structure, right? So let me zoom in for you guys. So as you can see, we have the accumulation, then we have the manipulation. We have a clear displacement, we have a clear displacement. So this is price rate this high. Then this structure, we have the break of structure to the downside, and we will be using what the supply zone that caused the break of structure, which this is the supply zone right there. So that's the supply zone, that's the area that caused the break of structure. We look for our our tools, and the stop is high, which is a 6.5 pip stop loss. Generally for me, whenever I'm placing a trade on Euro USD or GBP USD, I make sure I had what a pip buffer, because you need to understand that in some scenarios, some brokers and also slippage and spread can affect you. So I always make sure when I'm selling, I had what a pip buffer on all my trades, and it has saved me a lot of times. I'm not even gonna lie, it has saved me a lot of times. There is no point in you trying to catch a very tight stop loss and trying to aim for crazy risk to reward, because to be honest, when I stay long in the game, you need to know what you are doing and be careful, because just a tick or 0.1 pip can just stop you out, and the price is going to move in your direction, and before you know, you start to you go on tilt and you get pissed with yourself. Yeah, like the market is after me or this or that, but no, you are just being careless and you are not factoring in some things that could actually that could stop you out. So we make sure stop loss is not 7.5 pip, right? And 7.5 pip stop loss is so small. In fact, it's small, because based on the way we refined after the break of structure, you look for that demand supply zone that caused the break, and you play it that way. So after where is our target? So once you get in, the target was the swing low, because again, you understand that. Sorry, again, understand that you're bearish, right? So we have the swing guy, the swing low. We have the swing guy, and what price need to create a swing low. Easy peasy. So we have our entry. The trade was a 1 to. I remember it was a 1 to 6. So it was a 1 to 6 risk to reward trade. So a very simple trade, right? So you have the accumulation, you manipulated to the upside and distributed to the downside. How do you position yourself for your entry? You wait for a displacement in the direction of the trend. Now, if you are bullish, vice versa. But in this scenario, our bias is what we are bearish to the downside, right? And overall, if I zoom out, overall, let me zoom out. Sorry. So overall, we are bearish. Even overall, we are bearish. And this is the overall target in the first place. And you could see that price even came to take that low, but that's that's different. That's another thing for another video for another day. So for now, understand this, right? So we have the accumulation, price manipulated to the upside, and we what cash the distribution. Easy peasy. That's how it's supposed to be, right? That's how it's supposed to be. But yeah. So if you have any question, just put it in the comment section. I'm going to answer all questions that you have. Any type of question you have, I'm going to answer it. Okay. And this also brings us that takes us to the point where you have to exercise patience. Patience is so important in trading. Waking up and seeing the Asian session range, waiting for the manipulation, looking forward the displacements, and taking your entry. You see, everything takes what level of patience, right? I've been in a scenario whereby after accumulation we had the manipulation, and we had the displacement, and price never came back to give me an entry. It's fine, that's part of trading. You have to be able to deal with that, because if you want to stay long in this game, if you want to stay long, you want to you want to make a very good fortune from this game, you need to understand that you need to be able to manage that patience. A lot of things are going to happen, right? You're going to be waiting for an entry, price is going to miss it. Sometimes you take an entry, price will wake you out. All those kind of things, you have to be able to accept it, because the moment you go on tilt, or you allow those things affect you, you go on tilt and you can destroy your account. So patience is very important. And yeah, so make sure you hit the like button if you get any value from this video, because I'm going to be posting a lot of videos, a lot. I'm really active now, and this is kind of my first video, like, major video where I just do a breakdown for you guys. So make sure you make sure you comment any question you have. And if you don't have any question, just comment, let the algorithm, let this video go to other people. Make sure you comment, and make sure you subscribe. That subscribe button is very important. Make sure you subscribe, and expect more videos, right? Expect back-to-back videos. Okay, expect back-to-back videos. So yeah, have a good day, everyone.